the beauty about America for me, and there's a lot of things I absolutely love about this country, but the beauty is the system is almost self-correcting, right? Because there's no controls about that pendulum swinging back and forth. It's allowed to do that, and it's almost like a self-correcting mechanism. So if we go too far left, too far right,
it's going to swing.
It's self-correct.
So got into the finance, JPMorgan out in the UK. How is that process, jumping into that world?
Yeah, so that was in the late 90s, which was during the Internet 1.0 boom. So 2002 was now the bear market or the hangover of the Internet 1.0. And that was scary. That was real scary. I just bought my first house and I was a new immigrant to a new country, and I got a little bit scared.
How do you make sure you stay calm under high stressful situations? Something I do is I meditate every day.
The problem with me is when I get under pressure, I kind of go into the cocoon, right? I kind of withdraw, and that's the worst possible thing to do. And that means I stop working out and I sit on the couch and I eat bonbons or whatever and stuff like that. And so I probably don't have the best coping mechanism, but I think I've gone through enough now where I know like this too shall pass.
Welcome to the Chris Salerno Show, your go-to for real estate, business, health, and family insight. I'm Chris Salerno, CEO of QC Capital. Each episode, we explore the latest trends and expert advice from industry leaders. Whether you're an investor, entrepreneur, or seeking balance, this show provides an inspiration you need. Join us and elevate your game on the Chris Salerno Show.
Welcome to the Chris Salerno Show. I'm your host, Chris Salerno. Very excited to have a long friend, Greg, on the show. We're going to talk about a lot of things when it comes to finance, buying businesses, what to look for, what not to look for, and much more. So you're definitely going to want to stay put. Greg, thanks so much for joining.
Thank you, Chris. It's wonderful to be here.
I know. It's been a while.
Yes.
We've known each other for, it was funny because you called me, or I called you a couple weeks ago. I said, hey, how are you? And you couldn't pick up. So you texted me. And then right when you called me back, you said that you were at your graduation for your daughter. And I was thinking, wait, the one that just went to college? Because I remember you were touring colleges with her. So time flies. I've known you for, 4 or 5 years now.
I know. Time does fly.
It's unbelievable.
Well, congratulations to you on all your success in the interim. I've watched from a distance and I'm very impressed.
Yeah, thank you so much. I appreciate it. Well, I want everyone to listen about your wealth of knowledge and your whole background. But first and foremost, your accent is South African. So talk to us about the journey, coming over here to the United States and then everything.
Yeah, sure. So the accent is a great asset I found. So thank goodness for that, because I can say some really dumb things but still sound pretty good. So if that does help. But you're correct. I was born in Johannesburg, South Africa, child of the 70s, which is like ancient for kids these days. I grew up during the apartheid era in South Africa. I went to a government, they used to call them primary, elementary school and high school, and it was segregated. And we always knew that something was amiss, right? It just wasn't right. And so we went through the school days where there were basically terrorist events happening at schools, that the ANC would be bombing schools and people would go to rugby matches and bombing rugby matches. So it became quite an unsafe place to grow up, but fascinating nonetheless, because I saw when Nelson Mandela got released from jail and his ascension to the presidency, and that the whole thing occurred without bloodshed is actually a miracle.
Wow. How is the government over there? Because I heard South Africa's a beautiful place to visit. I heard it's just amazing.
Yeah, so we're talking about 94, and now we're 2024. So that's 20 years. Yeah, so
we're actually going on 30 years. 30 years. I'm like, time flies.
Yeah. But good for a CBO to not be out there. Unfortunately, the government has kind of gone the way of crony capitalism, like the rest of Africa. And I'm not sure why that is. I got some theories which we won't really tout. Yeah. But unfortunately, the government is just corrupt. And it's just, they're robbing the country blind. And it's a very wealthy and beautiful country. So it's kind of sad. But I'm an eternal optimist. And I'm always hoping that things will turn around to the better, which I suspect they will at some point.
Yeah, most definitely. We hope so too. Especially with our government and everything that's going on. I mean, I think around the whole world, I think a lot of people are just fed up with their own government and how they're being treated. You're seeing a lot of protests everywhere, not just in the United States. So it's definitely going to be very interesting times ahead of us, not only in the United States, but everywhere.
Yeah, no doubt. The way I view it, and, we're going at a tangent already, is I see it as a pendulum, right? And that the pendulum swings maybe too far to the left or too far to the right. And somehow the beauty about America for me, and there's a lot of things I absolutely love about this country, but the beauty is the system is almost self-correcting, right? Because there's no controls about that pendulum swinging back and forth. It's allowed to do that, and it's almost like a self-correcting mechanism. So if we go too far left, too far right,
It's going to swing.
it self-corrects.
Yeah, no, yeah, you're spot on with that. Very interesting analogy on it. But I definitely see that. What age did you come to the United States?
So I left South Africa in the late 90s, and I moved with my wife to London, England. And we spent a couple of years there. And the reason is that London or Britain used to be South Africa was a colony of England, right?
Okay.
And so they still extended work permits and work visas for youngsters to come over. So it was literally kind of an easy hopping off spot.
Oh, that's great.
It's akin, I would say, to some kids now who finish graduation and they go do a gap year in, I don't know, Spain or something like that. It's kind of the same thing, but we worked. I was a graduate CPA at that point. I worked at JPMorgan Chase in London. I worked in their swaps derivatives units. So
Before you even got to that and JP Morgan, what was that mindset like that you want to go in the finance route? It's a big question. As you and I discussed, we first met through a mutual friend about creating a institutional type of fund, and we hit it off very well. That's a whole different world. Finance, private equity, it is. I always say it's the Hunger Games, and it's a whole different world. So what was that thought process of, hey, I'm going to go this route?
yeah, great. That is a terrific perceptive question. So whilst I was in South Africa, we went through 1997, which you probably wouldn't remember, but that was the Asian crisis in 97. I was about 2 years. Okay. And I had the fortune to actually travel to Asia at the time, Indonesia.
Oh, wow.
And there I saw a currency collapse first time, right? Where you take $100 note into the Bureau de Change, and they would give you back literally stacks of Indonesian rupiahs, I think it was.
And so what was your mindset your mindset like when you had that exchange and you received that capital? You were like,
Well, I thought, and then you go to McDonald's, and you literally peel off one note of this big layer, and that's what a Big Mac cost. And I was like, this is just not right, but it's fascinating to me that how, economics can get so slanted from one side, that things could be such a bargain. See, and so that got me interested. I was always interested in the stock market growing
how
up.
money flows and how it works.
That's right. And I grew up in Johannesburg, which at its heart, Johannesburg was built as a city of gold. Okay, most gold comes out of the Highvelds in South Africa. Oh, wow. So that was always something gold. Yes, one, yeah. So I was always interested in exchange markets, etc. And
right now, I mean, last week I think gold hit its all-time high.
Yeah,
like huge. I think one bar, I think it cleared over $1 million for one whole bar.
Was that right?
Yeah. That's what I was reading is one whole bar, $1 million. I was like, wow, it's going.
I've been a gold bull for many, many years, but gold's a very difficult trade to make. It's a fair trade in certain respects. And so it's hard to kind of stay in a gold position, whether it's the metals are easier, but if you're in gold stocks, they're ready for it. So I'll whip you back and forth.
I see. My father, when he was alive, he was big into gold, but I couldn't come around to it. I don't know. I couldn't come around to, buying, selling gold. I don't know. Oh yeah. Who knows? So got into the finance, JP Morgan out in the UK. How is that process, at jumping into that world?
Yeah, so that was in the late 90s, which was during the Internet 1.0 boom.
Yeah, right, because the 2000 boom came too.
Yeah, well, the crash. The crash was in 2000 to 2002. That was the bear market, but the run-up was, 97 to 2000. And that, I mean, I was just in London and there were lights shining everywhere and, the glamour and glitz was on and it was just captivating.
Everyone, there was the energy there.
Everyone was making money. My wife kept telling me to buy, what was the stock at the time? I forget. With the Qualcomm, I think it was. I can't remember the name of the stock. But, these stocks were going crazy. Internet 1.0 stocks were going crazy. And everyone was trying to reinvent their business as some kind of internet service. And JP Morgan was trying to do the same with their swaps derivatives section, where they tailor-made derivatives and they would sell them on. So they wanted to be kind of the market maker for the whole street. If you do that. So they were pumping lots and lots of money into the endeavor, and there just was a shortage of staff to do it. So, lucky me, I got picked.
I know. How was that 2000, and especially 2001, because Manhattan is, the mecca when it comes to the Wall Street. How was that trading over there in the UK and everything happening over here? Did you see any ripple effect from that?
It was a carbon copy.
Really?
Yeah. So the whole world, Chris, the US is the engine. And the whole world does follow the US. So there was the old saying: if the US catches has a sneeze, the rest of the world has got a cold. Yeah,
Really?
and this is totally true. And of course, London is one big offshore market for what used to be for Russians, but for the whole world, it's a big offshore market, especially for currency trading. And so the linkage was very, very close. So
Right when that happened, you guys felt that ripple effect over there.
Oh yeah. Wow, what's the media?
And during that time, what markets shut down? Everyone took a pause on everything. Well,
So you're talking about the crash.
yeah.
Okay, so let me just regale you one other story. So during my period in England, I visited Atlanta. My eldest brother moved here around the time of the Olympics, which was '96, and so I came to see Atlanta, and Atlanta was on fire in '99.
It still is.
It still is. It re-caught fire, and again, my eyes got wide open. I was like, this is UK 2.0, because it everywhere was like London. I mean, it was just fun. It was just phenomenal for a guy like me who liked numbers and finance and money, and it was just perfect. And so at some point, my wife and I decided to move over to the US.
I love it.
So 2002 was now the bear market, or the hangover of the Internet 1.0, and that was scary. That was real scary. I had just bought my first house, and I was a new immigrant to a new country, and I got a little bit scared.
Really?
Yeah, not knowing.
How is that feeling? I mean, an immigrant to the United States, just purchased a home. You probably had a certain amount in the bank account, and what's next?
It's scary because I think the benefit of growing up in the United States is that you come to believe in the infallibility of the United States, right? That there's the saying that you never bet against the US, right? You never bet against the Fed, which is the US. And so that was, sorry, I lost my train of thought. So that's the benefit of growing up in America, is like, you think, you'll always get this rebound. Yeah. Growing up in South Africa, where you see decline after decline after decline, you're like, where the heck is the bottom of this, right?
Yeah,
and that was my mentality. Unfortunately, it's like, where's the bottom? So I got scared. I probably did some things which were not smart in retrospect financially.
Yeah.
But we made it through.
No, I love that. That's good. And I think you have to come from that. And I love that. And we've had a ton of individuals that come from other countries over here to the United States on the podcast to hear their story. That's a true American dream, coming from another country into the United States and building a wonderful company. And now you have a wonderful CPA practice here in Atlanta, which we'll touch on here in a second. But I think that is the true American dream right there.
You're spot on.
I think Americans also take for granted United States. I mean, even though, with everything that's going on in the government, things like that, we still have a beautiful country we live in, and beautiful opportunity that we are able to take advantage of.
No doubt.
Compared to other countries.
Yeah. No, you're so right. So there is a percentage of the population which I would just call a little bit lazy, or
a little bit?
Best on the hog kind of thing.
I would say a lot.
It's okay, I'm being polite. But
you're being nice.
I'm being nice. But, guys like you fully realize the opportunity and seize it, and you got to take action. It's not, you can't sit and wait for it. You got to take action. But immigrants are kind of born that way, right? To take action. Yeah. So if some of the Americans don't wake up, they're going to find, their businesses and jobs are lost to immigrants who are willing to work harder.
And at the end of the day, they should have the opportunity to run beautiful businesses if they're willing to come in and work hard. If you're
in legally.
Come in legally and willing to work harder, you should have a wonderful business. Yeah. If you're going to sit here and be lazy and feel entitled that everything should be handed to you, I'm sorry, it's not the way the real world works. I have a younger son, 4.5 years old, as you know, and with soccer, he was in soccer camp 2 weeks ago, and I saw him. I went to go pick him up. I saw him. They were finishing up. He went and was pushing another kid, so the other kid pushed him down.
And then right when my son fell down, he looked over at me and I'm like, I shrugged my shoulders. I said, you asked for it, don't push the kid. And so you need to learn lessons like that. You need to understand that you're not going to get everything what you want. It's not going to be entitled and given to you. You have to go out there and work for it. And that's the biggest issue with this generation is they want to sit on their cell phones and they want everything just handed to them.
Yeah, I wouldn't be so harsh on this generation. They're growing up with pressures that we hadn't had to deal with. So I haven't stood in their shoes. I'm not sure I can make an opinion call on that. But
I think we've grown up with different type of pressure. However, we've grown up with easier access with technology.
Yeah.
And I think technology has gifted us so much access. I mean, look at this. This is going to be on YouTube, all on our podcast, everything. I can pick up a cell phone and call you really quick.
Yeah.
Back in the day, I had to call your house phone, and if you don't pick up, I saw you.
So the way I see that is we're spoiled for choice. Yeah. And as a result, we don't make choices. And we're passive participants in our own life, right? We're just watching a screen with pictures going past us, figuratively, if you will. So I think, again, this ability to take action is a little bit dormant in maybe younger generations. But again, that's such a generalization. There are people like you, like me, entrepreneurial, who will put their head down and grind and win.
Most definitely. And at the end of the day, those individuals who stay consistent, and they have that work ethic are going to win. You don't necessarily need to be right all the time. I'm not right all the time. I make tons of mistakes, but I learn from my mistakes, and I do not make the same mistake twice. If I make the same mistake twice, I'm a fool. Like I say right now, I'm a fool if I make the same mistake twice. So if I make a mistake, I learn from it, and I don't have that mindset, why did I make this mistake? I said, what did this mistake teach me?
Yeah.
And then from there, I don't make it again, but I keep staying consistent. That's the biggest thing is people don't like consistency in their lives. Even they do to a certain extent, but they like change all the time. I mean, even when I interview some people and I look at their resume and I see that they've been at, 10 different jobs the past 4 years, I scratch my head. Like, why are you bouncing around? And you can't stay consistent at one location. Yeah. That's a concern. And I think human nature, a lot of people just can't stay consistent, and that's why a lot of people fail.
Yeah, I would change the word consistent to persevere. But a lot of people can't persevere, had the discipline to persevere.
Discipline.
And also, when you do take a knock, you got this little recurring voice in your head, like you're a loser, you're a dumbass. I don't know if I can say that.
Oh, you can say it.
And you kind of wear yourself down as opposed to saying, learn the lesson, move on. So there's an emotional baggage on failure, which is very hard to carry and get through and persevere through.
The biggest thing before all of this is your mindset. I mean, if you don't have that right mindset, if you have that doubt that you're going to fail, if you have that little voice in your head that's talking bad about you, if you don't have that right mindset, I mean, you're not going to persevere. You're not going to be able to achieve your goals. And it starts with making sure your mind's right. Because one thing I've learned, no matter what you do in life, someone's not going to like it. Oh, yeah. I mean, someone's just not going to like it. So it's like, okay, you can't live your life by trying to please everybody. You just got to do you. And if someone's not going to like it, hey, it's not for you. No, I wish you the best.
Exactly.
So spend some time in the UK. How long were you out there?
Couple of years.
Yeah. And then you came over to Atlanta, and then you landed in Atlanta, bought your first home. What was that next journey?
So here's the mistake.
Let's hear it.
Well, let's hear it. There's never mistakes in life. There's lessons, right? Just put it that way. So when we left the UK, my wife and I, knowing that we were coming to the USA, papers, everything were organized. We decided to take a couple of months off, go back to South Africa, see family and friends. And a lot of my colleagues from South Africa had immigrated to Australia, to Sydney, Australia.
I've heard of these peaks.
Australia is wonderful. So we decided on our kind of 2-month sabbatical, we'll go visit my wife's brother who lives in Sydney and some of our friends and stuff. And Sydney shows itself off like no other city in the world. It is exquisite. I mean, the beaches, the barbecues,
It's about, like a 25-hour plane ride over there?
Yeah.
So it's a good haul.
Yeah.
So I would say if I go over there, I'm going to have to spend at least a week. Like, it's not just like...
Yeah, the time difference is brutal. You arrive the day before you left kind of thing. But Australia's like beautiful. It's lovely, and it's no worries, mate. No worries, mate. Yeah, that's Aussie for you. So we got captivated, and we liked what we saw, and we thought, are we making a mistake by moving to the United States? But we said, this is the path that we have chosen. We're not going to deviate, and we go for it. And now I'm sitting in the US. I got my house, the car, the white picket fence, baby on the way. If I maybe had the first baby already, and the market's collapsing around me, and I'm going like, what now? What now? And out of, I think, sheer lunacy, my wife and I said, you know what? We don't want to, be at the end of our lives and go like, what if? And so we said, we're going to move to Australia. And around the same time, I was perceiving of a pending commodity boom, and I thought Australia would actually be a good place to establish myself to benefit from that. And I actually did have the opportunity to go to Perth and Melbourne and stuff, and so on. It was all fascinating. So we did move to Sydney, Australia, and I continued my finance/banking career in Sydney, Australia. I spent about 5 years there, had another 2 kids. But then for other reasons, which we can go into if you want, but they're kind of depressing, we decided that it wasn't for us. And we kind of tail in hand came back to Atlanta, and thank God I did. I've loved it ever since.
Yeah, Atlanta's growing, like we said, substantially. It's a great city. It's a beautiful city. It's it reminds me of Houston geographically. Like, Houston is so large geographically. Atlanta, you can be in one part of Atlanta and just not even see the whole other city. Whereas if you're in Charlotte is so small, you and I can walk around the whole city in about an hour and a half. Yeah, Atlanta, it's going to take you.
Atlanta's lounge. You can't see the horizon in Atlanta because of all the trees. So you do
a lot of rain.
You can't get a full sense of where you are, and as we'll get further into my career at Wilmington Trust, but I had the opportunity to go to Harrisburg, Pennsylvania, where I was schooled on the Civil War experience in Harrisburg, Pennsylvania, and that got me into the whole Civil War rabbit hole.
Are you a history nerd?
Oh, total history nerd.
Really?
Yeah, I went down that rabbit hole hard.
Really? So don't tell me you dressed up into the Civil War.
No, I didn't do that. But I went to visit the Kennesaw battlegrounds, and all the history behind all of the battlegrounds. Of course, you've got Stone Mountain here in Georgia, which is controversial.
Yeah, so something urged you, and boom, you went straight.
Oh, yeah. I thought to myself, if this is going to be my country, and my husband, I should know the history.
I love that, because a lot of people, don't know the true history.
No, and let me just say, if you don't understand the Civil War, which is difficult, I don't think you can really understand America today.
With politics.
Yeah.
Yep. I think that's super important, and this may be controversial, but I did watch the Tucker Carlson and Putin interview, and it was 2 hours. I watched it all, and I will tell you, during that interview, I learned so much history about Ukraine, England, all the European countries, and Russia, which back to the 1800s, and it opened my eyes, and I was like, wow, like, this is stuff that no one's saying, obviously, but he has it on his platform that I learned a lot about.
Yeah.
And I had a different respect for everything that's going on because I learned that history. And so you are 100% right. Understanding the history and the origin on how we actually formed the states and came together through Civil War, I think it's important.
I couldn't agree more. It's very important.
Yeah.
You got to know where you're coming from before you know where you're going.
I love that. No, you're spot on there. So in Atlanta, finance industry, talk to us about that, and then you're transitioned.
Yeah, so when we got back to Atlanta, it was kind of hedge fund heyday, right? Hedge fund boom time. And I somehow got an interview with a startup fund, and they weren't funded quite yet. And
at that time, you've been in the finance industry for what?
Oh, at that time, maybe 10 years.
10 years. I mean, so you understand it all. You're knee deep in it.
Yeah.
And the hedge fund boom starting to go up now. So you then.
Yeah. So if you remember, the hedge funds did really well between 2000 and 2020, then 2002, because of the undulations of the market and having short and short and longs.
Yeah.
You do hedge it. Yeah. So everyone thought, wow, we'll never lose money again if we invest in the hedge fund. The problem is that the returns actually just went to zero, basically. But I got involved there. I met a few ex-Invesco guys, actually, who ultimately introduced me to people around Atlanta, and I landed at Wilmington Trust, a bank with a wealth management here in Buckhead. Yeah. And so I was in the investment management division of Wilmington Trust, where I ended up managing a boatload of assets, just because as people left, they just kind of kept Give it to Greg. Give it to Greg. And so
Greg will tell you.
So I oversaw the private equity platform, I oversaw the private real estate platform, or the whole alternatives platform, practically hedge funds, real estate, private equity. And then we did a foray into a alternative mutual fund, which was quite popular at the time, 40 Act fund for hedge funds.
So let's talk a little bit about that in detail for those individuals that may not understand that at our level.
Yeah, so Wall Street is phenomenal. It's a phenomenal sales engine, Wall Street, right?
Yeah.
You're not going to get intelligence necessarily from Wall Street. And so we were part of Wall Street. I mean, essentially, right? We're a wealth management company. We're a bank. And we saw the whole private market hedge fund space go away because a lot of people had piled into there too much capital. Now, all of a sudden investors were willing to tolerate K1s and all these sorts of things. And now when the returns were moving against them, they couldn't get their money out because of gates. Everyone just kind of soured to it entirely. And so this whole new family of, okay, well, the problem with hedge funds is they weren't regulated properly. So let's jam it now into a 40 Act mutual fund, which is highly regulated, and see if we can distribute it that way. And I left before, we got the thing off the ground, and I left long before it kind of took off or didn't take off. Yeah. But it was an interesting experience. I should also say that I was quite involved with some of the high net worth clients, over bank trust clients and the like. There we would try to find investment solutions that were tax efficient for the investors. So there was a tax planning element there as well.
Yeah, most definitely. And what was popular back then when it comes to avenues of investing into certain different type of stocks and things like that? Was the tech on the boom back then? What was popular from what you see today?
So here, let's just say when this occurred. We're talking about the period of 2007 to 2015. No, okay. So April 1st, 2007 was my first day at Wilmington Trust.
Well, that was the best time, huh?
Well, that was right before the crash. Exactly. I probably saw the last quarter of the boom.
Oh my goodness.
And then we just went, over the hill.
You've been through the ringer.
I've seen I've essentially seen three bear markets now that I can tell, and this market right now is levitating.
I think so. We're going to dive into your advance on that.
We'll get there, but anyway. So that was the period of time that was going on. 2008 was just I'm actually honored to have lived through it and to see what it was. I remember folks coming in that day and saying, "You'll never see it this bad again. You'll never see it this bad again." And they were right. I mean, it's so far, so right, And also, obviously, these bank stops created, and banks went out of business. Our bank went out of business. It could take FDIC broker to M&T Bank.
Really?
And so you see all of this going.
We just did some work with M&T. They're actually flying us up to Baltimore because they have the stadium to have us watch a game in October.
Oh, great. Yeah. So, again, don't want to digress because, that's not really interesting. But, mixing banks together is like mixing oil and water. Sometimes it doesn't work. It doesn't work culturally.
Or olive oil and vinegar.
Yeah.
Or you can see it, separate.
And at that point, I came to learn that management will actually lie to employees. Bold-faced, outright, in-your-face lie.
So that's when your eye-opening.
Yeah, is like, there's no problem. There's no problems here. Just focus on this little shiny instrument. No,
don't worry about
bank sound. And within 3 months, I think the bank was underselling. As Barron's used to say, the undertaking of Wilmington Trust. Taking over.
Wow, so you remember that?
I do.
I mean, there's some great movies on it. The Big Short. There's another one called Margins. I don't know if you've seen Margins. Very good movies, like the documentary.
Yeah. So that reminds me. So we did have some good outcomes because we had invested a good amount of client capital in volatility-based hedge funds.
Oh, did you?
Yeah. So that these funds they would like death by 1,000 cuts, right? Because they essentially have their long premium. They paid a premium for a large, improbable event, tail event. And so what happens is you get nicked every month, because the premium just wastes away, and eventually will just go to zero if no material event occurs.
Oh, yeah.
But you get the material event, and you're looking at 10x, 20x, they call it gamma, but you get exponential tower towns. So we did great in volatility. We did great with some short sellers. And then we had a few funds that we invested in that had CDS insurance.
Okay.
So those, CDSs blew up, and again, it's a tail event. Right, we collected well, so we did well for our investors, but we weren't able to turn quick enough. Right, we were paralyzed by the fear ourselves.
So you noticed that,
Yeah,
and you weren't able to pivot fast enough.
we weren't able to redeem and redeploy capital fast enough. Yeah.
Very interesting. Yeah, I think those times a lot of people lost money and a lot of people made money. Just all
Less made than those.
Yeah. Most definitely. And I think it's how you analyze a market. And we're going to definitely touch on what your thoughts are, in this current market environment that we're in, because it is volatile. I saw Jerome Powell this morning made a statement that the time is now. Hinting that the Feds believe time is now for that next rate cut in September of 2024. I think it's going to be a quarter of a point. I'd be shocked if it's anything more, but I think they're going to test that a quarter, and we'll see where it goes from there. We're going to dive a lot more into that here. So you went there, market crash happened. Walk us through those next steps that you.
Well, you're kind of like a deer in headlights, right? So again, here I am as a fairly new, in quotation marks, a re-immigrant. Yeah, right. I'm like, well, come on, this guy. I'm going through this again. But I managed, luckily, personally, to get a nice residential property because it was a distressed sale. So that worked out well. Oh yeah, my wife was happy we were back in a nice house. So the folks that I worked with at Wilmington were actually the result of a buyout many years prior. And these folks were getting roughed up pretty bad because they had really received stock in exchange for selling their company years ago. They had never divested of the stock. And so they were watching this train crash from the front seats.
Oh, wow.
And so I would go up and I'd see lovely people and stuff, but, I really saw hard living stress.
You could see
stressed out.
You could feel the energy.
You could feel it. And I was like, well, thank goodness I'm not in that position, because that's a bit rough. But I did see it. And, look, the good thing is that it might be abrupt and it might be painful, but it causes change very quickly. All right. So any inertia just disappears. Right. And all of a sudden people are hopping out and doing something and starting this or moving that or, so things happen. Most opportunity occurs in crashes, right?
Oh,
we know that.
Big opportunity.
You just need to have the capital. You don't need that much capital, but you need some chips to put on the.
Yeah, and I mean that's what we did in 2022. I noticed where the multifamily market was headed. I noticed that you can't just throw paint and carpet on a unit and charge $300-400 for a rent increase, and we were doing that. And it was great for our investors at that time. But I told the team, I said, we need to sell. Like, this is not going to last a long time. We sold the assets that we could sell, given the debt that we had on those assets. And then we said, okay, I said back to the team, I said, we're pivoting to the car wash sector. It's mom and pops. There's a huge opportunity in it. Multifamily, in my opinion, for the next 1 to 5 years is going to be very stagnant. It's going to be very difficult to push rents given the current market environment. And you have to see that type of opportunity. And when you see it, you have to take action on it. You have to be disciplined enough to know when to take that action and then just go with it.
Yeah. So I'll respond in two ways. I've had that epiphany, man, this is great. This can't get any better, And I've had it twice. And now I know when you have that epiphany, you're probably right. It's not going to get much better.
Agreed.
So you need to get out of Dodge.
Oh, yeah.
That's the first thing. The second thing which we'll get into philosophy, I guess, at some point, but I've become really disillusioned by the whole, at least asset management space, let's put it that way, because I found that the products, the investments that work are generally the investments du jour, the popular fashion investments, right? So yeah, I mean, listen, you have, Internet 1.0, Internet 2.0, tech stocks, you just have market gets lit up on certain sectors, multifamily, for example.
Yeah. Oh my God, multifamily from 2015 to about 2020.
You couldn't lose it. You couldn't lose money.
Couldn't lose money.
Throw money at the wall.
Oh my God. No, you invest in 2019 and 2020, you sell, you double your money in 1 year. And everyone was like, yes, yes, yes. And now, in my opinion, your hold period is going to be 7 to 10 years now. You're not going to be able to push rents as fast as possible in 5 years and try to double your capital in 5 years.
That outperforming trade is probably gone.
Yeah.
No. And it's a good asset. It's a good asset class, and it'll still pay cash flows. It's the 100, but it's not going to attract the capital like it did before. Yeah. So my point is that investors get really excited at the wrong time.
They put too much feelings involved.
Right. And so, they may put money in 2 years before the crash and do really well, but not sell in time. And so I've always been of the mindset, I'm a contrarian. I know people say that all the time. I really am a contrarian. But it's hard to be a contrarian, especially if you're in our space where you're relying on investor capital at sometimes, because investor capital is not there when you really want it to be there to take advantage of the opportunities. So I think my thinking at the moment is you really got to orientate yourself with the right people around you, the right family officers, people who think like you from an investment perspective, and they'll be willing to charge in when everyone's going for the doors.
100%. And I think the big thing too is I wish someone, and I'm glad I met you early on too, but very proud I did. I wish someone told me when I first created QC in 2019 is focus on focus on mastering the art of raising capital. And that's all you should do. And I found this out during COVID. I found this out during 2023 and 2024 this year, is no matter in good times or bad times, people always need capital. So if you can master the art of raising capital in good times and bad times, people will always need you. In bad times, you can have a higher negotiation of ownership of deals. In good times, it may be a little lower. However, people always need capital no matter what. And so that's why we pivoted heavily in 2024 is really pivoting us, which I did with the company, to become a master at art of raising capital. So we know that with the deals that we're doing, we can have those like-minded investors pivot with us if we need to and when we need to.
Yeah. I really respect what you've done, because I saw the same thing, right? So I started participating in private markets, back in the years, as they called it, right? And there it was a very clubby.
It was new, but very
well. Privatization has been around for a long time.
Forever, yeah.
It was clubby in the sense that it was the playground for endowments and foundations and big money. You knew what accredited investors were, but I think even the qualification was higher than it was today. And so it was really the preserve of the wealthy.
Yeah.
Right.
Oh yeah.
And then, we talked about the 40 Act mutual fund. That is part of that whole trend of what they call, I hate the term, but they call it the democratization of alternatives. Right. Okay. I hate that term. But really what that means was opening up private market investments to investors who hadn't had that before.
Yeah.
And that's where guys like you have just done so well, because you've realized the way to do it is a platform, which, and you can tell me more about your platform, but it's more, it's digital, it's content driven, and you've got the audience, and I know you've got a wide audience, and I know you've introduced me to some really top-notch people. Right? So whatever you're doing, you're on point, and you're correct. You got the platform. So now that you have the platform, you can put people into responsible investment.
Most definitely. And I think times of raising capital has changed. I'm like I told you earlier, I'm headed out to meet with Oren Claff, and one of the things him and I was talking about, and I also saw he post as well, is that when back in the day when you raised capital, you went on the road show. Basically, you hopped in the car, hopped on the airplane, and you had strategic meetings in certain locations, and you're going to, go basically door knock, possibly some locations. If not, you already have set meetings. You're going to go in, meet with them face to face, do your pitch, try to get them to invest. Where now, and that may be still the case for your larger institutions, things like that, but for your retail, your accredited retail investors or your family offices, believe it or not, even family offices, they are seeing you from social media. They are following you on social media. They're hearing everything. We visited one of our car washes on the way here to Atlanta, and one of our car washes is out in Greenville, South Carolina. One of the managers there said, "Chris, I love what you do on your podcast." And I'm like, even our employees listen to the podcast. Mm-hmm. So that new platform of raising capital and that new avenue of raising capital has attracted investors to come to you instead of you go to them.
Well, that makes sense to me, right? Because, the worst thing about being on the buy side, and I've experienced this a lot, is the amount of sales calls you get pitched at you, right? You get this, it's just the way you have to deal with it, is you kind of get blunt.
You get bombarded. Yeah.
And you ignore people and stuff. So if I was an investor and I could surreptitiously, ghost you online, there's no investment from my perspective of time. It's, as much as I want to give, I'm not caught in a room with you and having to listen to you or pitch to me unless I invited you in to do that.
That's right.
Yep. So I think that format's much better from a hard sale to a very soft sale educational approach.
Most definitely. And even if you're doing some outbound reach, say I'm looking at someone on LinkedIn and I see Greg, you're connected to him. I may say, oh, how do you know Greg? I'm connected to him as well. And that's basically like not a true introduction, but that's kind of like a little introduction.
Well, it's better than calling someone and say, hey, I got this long short fund.
Oh, I know.
It's like, oh boy.
I know. Yep. Add it to the list.
Yeah. Or a venture capital.
Oh my goodness. Those are a dime a dozen now. But I've really noticed that the time of raising capital has changed. You're seeing a lot of your big hedge funds. I mean, even Bill Ackman say that they're opening their hedge funds up to retail capital, and they're doing it through their social media presence. People are following them. They're seeing what they're doing. They get to know them on social media. You feel like you know them tremendously, like you're in the room with them. And then you call them up and say, hey, I found you on social media. I've been following you for a while, and I like what you're doing. I want to invest. That happens so many times. And it's building that platform, that community, that educational part, which I found, one, it's rewarding because you're helping other people who want to take action, who want to stay consistent and disciplined. And then you're also educating them on the private equity space, which there's a lot of material out there, but not so much, if that makes sense. And it's a lot harder to gain, too.
Yeah, I mean, you've got to learn your way through private equity. The capital calls, the drawdowns, the liquidity events. It's a whole different beast.
It is. It is a whole different beast. So coming out of the 08, coming into the early teens, 2012, 13, 14, walk us through that and what you were...
Yeah, so I kind of held on, watched the debacle, big, that is 08 to 10, held on with the bank, stayed with the bank, went through this merger, didn't... oil and water analogy, didn't like it, looking for an exit.
Oh, yeah.
Primarily because I think I am more of an entrepreneurial guy, and I was being held back because of institutionalization. I was institutionalized. That's what happened to get, right? Institutionalized in the bank. And a fellow South African, actually, who I knew, got hold of me. He was working at a fairly large wealth management company, which was doing roll-ups. Yeah. So that was the interesting part. They wanted to start a investment division. They wanted to start their own fund, essentially. And so I thought this would be great. I would join them as a partner to do that. They would help with their clients to be investors. I could, extend some of the tax planning work out to them, kind of a in-house CPA. So there can be advice on that side. There can be advice on investment side. And so that, for me, I thought was the right approach to take. I jumped into that, spent a lot of time over the next few years, raising money, putting money to work, exiting liquidity, dealing with investors. Unfortunately, we had one investment which didn't go as planned, and that's just saying it nicely, although it's still alive and we're still trying to, put the paddles on and keep it going, but it's still alive. And it's a flying taxi company that I invested in 2017.
Is that in Miami?
No, it's actually here. It's actually in Utah. The company itself is in Utah. Interesting. There's quite a few of them. But when I invested, there's people like Greg, like, what are you smoking? I mean, a flying taxi. Come on.
I think it's definitely going to come.
It will come.
I mean, 100%. If I can Uber a flying taxi to my driveway to pick me up to go to the office, I would do that every single day.
Exactly. It will come, when the legislation allows for it. And the other company that we picked up in the same bundle was it's called a desulfurization process. And the EPA mandates what level of sulfur content can be in different fuels. Jet fuels, bunker fuel. Bunker fuel is a shipping fuel. Oxide bunker fuel, or just regular fuel. Yeah. And so the way it's normally done, I know this is too much information, but the way it's normally done is by the refinery, they'll actually heat up the gas, the petrol, whatever, to get the sulfur to evaporate. That's quite a dangerous process. If you think about it, you're heating up gas with I mean, that film. So this process that we invested in is more of a chemical, low risk process to take sulfur out of fuel, and they've got a pilot plant now in I think Virginia. So it's slowly, moving forward. But my partners got impatient. We had a few regulatory inquiries which weren't fun, and at the same time they were rolling up. They were concerned with the roll-ups and stuff like that. So that was my first experience of a partnership going south.
Talk to us about that, because if you can elaborate some more, I have a business partner. Him and we talk probably 20, 25 times a day. The great thing is that in certain things in life, we're completely opposite. But in business, we see eye to eye with things. We, knock on wood, never had a huge discussion, but we both see it when we have very tough discussions about certain things. We see it from each other's perspective. And we're able to always come to terms so far, knock on wood. But what I've realized is a partnership is a marriage. I mean, you're talking 40, 50 years. And sometimes partnerships can break up, just like you can have a divorce. And sometimes the divorce can be easy and smooth, and sometimes it can be rough. So walk us through that mindset. I mean, your first partnership, starting to unfold there, and what is that like?
Yes, to be clear, it's my first partnership where I'm an equity holder. Yeah, but I guess that's what a partnership is, right? You're an equity holder. Lots of lessons learned, some quite tough. Just having the rug pulled from under you, when things are not working, and there's a come to Jesus meeting, and Greg, by the way, your monthly allowance, your monthly salary is now cut off.
Yep.
And that's like oxygen being taken out of a tank kind of thing. So that was not nice. That was quite brutal for me.
I think a big thing is just like in a marriage, when you first, the first couple months before you get married, you're so happy, or even first couple of years, you're always very happy. So you're not thinking of a prenup. You're not thinking about a contract. You're not thinking about what if I get divorced and I build a company and either of them takes half of it from you, especially depending on what state. But then you go through the marriage and then you go ahead and get a divorce, and then you realize, shit, I should have had a prenup. I should have had these contracts in place, because now I'm going to get wiped out. And I think a lot of people in business relationships, even though they have a great partner, everything's going very well, they don't think, oh, well, my partner, can't do this, or they won't that.
That's not that.
Yeah, that won't happen. But then something goes south and it happens, and then you're like, damn, we should have had the contracts. We should have had everything in writing.
Yeah. So no. So that was not the case. I know that's good. Very careful of papering everything correct.
You were ahead of the game then.
Yeah. Listen, I gone through 2008, right? Not personally affected, but I'd seen saw what happened to investors and how important it was to Dr. I's.
That's the T's, right?
And so I took care of that, thankfully. But yeah, listen, a partnership is a marriage. It's people. And in the fullness of time, as I've got into my own business and become my own boss, I have more sympathy for my ex-partners at what they put me through and what they went through, because that's probably what I'd have to do now in the same situation, right? You're looking at failure, and you got to take action. So yes, and so I appreciate that. The way some of it is delivered is probably not nice, but so what? We're big boys. We can all handle it. It's the real world. But it does leave you with a semblance of PTSD.
Yeah,
I do have that, and my first reaction when something goes wrong in business is blind fear and panic, because I'm back there. I'm back in this situation.
Oh yeah.
But okay, you learn to work through it. You learn to calm yourself down and put your head down and work through it. You have a good lesson.
I hope you're enjoying today's episode. Just a quick reminder to make sure you never miss an episode. Stay connected with us by following us on social media platforms: Instagram, Twitter, Threads, TikTok at Chris_Salerno_. And don't forget to subscribe to YouTube to catch the video versions of our episode. You'll get exclusive content, behind the scenes footage, and much more. Head over to YouTube, Chris_Salerno now, and hit the subscribe button. Stay tuned, because we've got more great content coming right after this.
How do you make sure you stay calm under high stressful situations? Something I do is I meditate every day. Mornings, evenings, I meditate. Even Tuesdays and Thursdays, I go to professional meditation now, where it's 1 full hour. I turn off my phone and I do deep meditation. How, I know through experience you learn that, is there any other ways that you really try to stay calm yourself during those situations?
Well, alcohol is a good mechanism I find sometimes. And that's joking, but wholly joking. No, then sometimes it takes off the edge. The problem with me is when I get under pressure, I kind of go into the cocoon, right? I kind of withdraw, and that's the worst possible thing to. And that means I stop working out and I sit on the couch and I eat bonbons or whatever and stuff like that. And so I probably don't have the best coping mechanism, but I think I've gone through enough now where I know like this too shall pass, and I know how to sit with the discomfort. I think that's the most important thing, is just to know. You can't shift it. It's where you are. It's meant to be. I think I take a bit more fatalistic view of things. I'm meant to be. It's pretty crappy what's happening now, but it sucks. But you know what? You'll get through.
You got to keep going.
Or you'll die. And so what? If you die, you won't care about it anyway, right? You won't even. So it's a no-loss proposition. I try to convince myself, but it's not so easy.
No, it's definitely not. No, definitely not. So having a failing partnership, walk us through, where things go after that.
Yeah, so that's a great question, which I just got to kind of answer, think about the answer a little bit. So due to some of these investments in this fund, which I mentioned, and me having a good feeling about the outcome, and it would be quite rewarding financially if I saw it through, I decided at that point that whatever I did next was not get another job where I'd have to relinquish all my investments and holdings and sort of kind of thing. I was going to pile, just go through this. And so I have, and we won't go into the nitty gritties, but that fund is still under my care and management, and it's winding down, and it's all going to be good. It's going to lie there. As Trump says, it's going to be great.
There you go. It's going to be great.
It's going to be great. It's going to be huge. I love it. So what I did, and I was also catbird seat to my partners doing this roll-up in the wealth management space, where I'd help them. I wouldn't negotiate terms, but I'd model them out for them and, give them ideas to think about. And so I thought, this is probably something I can do, because I was doing it with OPM, other people's money. I could probably do it with my own money. And I thought, let me look at doing a wealth management roll-up. And I took a look, and it was very popular, and the multiples had just gone crazy on that. And I am a CPA, was a CPA, and I thought to myself, well, let me have a look at what's going on in that space. And it was the same thing. And I know we'll talk, Chris. Well, the multiples are much lower in the CPA space. Okay. You can pick up a practice for 1 times 12 months.
I can actually I take that back. I can actually understand that, because a wonderful website I love to go to, and I encourage everyone, if you don't understand business, or if you're in college you want to understand business, go to buybizquest.com.
Oh yeah,
and go put your information in, get the financials of some business, and start asking questions, on how they came up with
this. The BuyBiz, is that the same one?
There's BuyQuest and there's BizQuest. There's BizQuest and there's like buy, biz, sell.
But they're essentially like classifieds for
business. Yeah. No, that's great. And sometimes I'll look in the Charlotte market, or they'll automatically pop up, and there's a lot of CPA firms, $100,000, $200,000, $300,000 you can buy a CPA firm.
Yeah.
The good thing is everyone's going to need to do their taxes.
Well, I hope.
I know.
I hope, unless they get rid of the code totally, which would be I think that would be impossible. To chuck the code out and do a flat tax one day. It could be anarchy.
Yeah, I don't think they would. It will be fake. I mean, look, we're the new we'll find out come November. But someone who's trying to run for election saying capital gain tax at 44.6%. That's ridiculous. I think you're going to see more people just flood to Puerto Rico or have offshore accounts to
That's what I call African economics. To be kind about it.
So you were looking at companies that had high multiples, and then the CPA firm with the low multiples.
Yeah. So I was like, and I had already been building up my own kind of advisory practice, as you know, Chris, because we worked together. We did. We met, and that was going really well. Some of my clients were saying to me, hey, Greg, we like the strategy. We like the tax planning. We just need something to file our damn taxes. And I heard it enough times, and I was like, maybe I'm just leaving a bit on the table here. And so I started, the whole confluence of M&A and stuff, and I started looking at practices and whatnot. And it took me the better part of 2 years, and I ended up making an acquisition. It was a $850,000 revenue practice. So not a tiny, but not huge, just enough.
A good decent.
A good, decent one, enough to kind of get my toes wet.
Oh yeah.
Dip my toes in. And yeah, listen, I can't say to you it's been straight sailing all the way up.
And normally
ups and downs.
It's definitely not right when you take over a business. No. Right when you take over, and thankfully we have investors in the car wash sector that understand, right when you take over, it's not, oh my God, it's automatically profitable. Like 100%. No. It takes time for the systems and the marketing and all that to put into place to then grow.
No downs. But you got a formula now, I assume, right? So I did one transaction in 22. I just finished my second transaction in May of this year.
Congratulations.
Thank you. So I probably need to have my head read this fall. But it's good. It's fun. I enjoy it. It's challenging. It has its problems. Everything does. But yeah. Happy to talk about anything you want.
No, I love that. Talk to us something that you see, when it comes to the M&A type of world, that a lot of people make mistakes. I will tell you, with our car washes that we're buying, it's around 85%, 90% mom and pop with the car wash industry. And what I find the most common mistake is they leave personal expenses in the P&L. And when we calculate for the purchase price based off EBITDA, we include those personal expenses because it makes the purchase price a lot lower because they have higher expenses and a better buy for us. But I noticed across the board, that's the most common thing, is that they leave all of that in there and they're leaving a lot of money on the table in some circumstances.
Yeah. As you know, M&A is a career unto itself.
It's a whole different world.
It's a whole different world. And just trying to do part-time M&A, which I think you and I are trying to do, you can make mistakes.
Oh my God.
So some of the mistakes I see, yes, sellers' discretionary earnings is very much open for manipulation. I don't know if that's the right word, but you know what I mean. Especially when you're looking at an owner-operated business, the seller discretionary earnings includes the salary of the seller working in it.
Correct.
Now, the intention with most SMB, small and medium-sized business acquisitions, is to put management in. That's the de jure, right? And that's the golden.
Correct. Golden management in and try to be passive. Yeah.
They go to do the next one and the next one.
Absentee, all this
cash flow machine, so to speak. But in the seller discretionary earnings is our gal's earnings or doing the work. So you got to take that out, because if you're not doing it, you're paying someone to do it. So I do see a fair amount of wiggle room in the SDE. The other thing so important is working capital. I think my community,
we don't. We've dealt with that. When you buy a business,
I can see you know it the way you just react.
Oh my God! When you buy any business, and I bought. Funny enough, I owned a nail salon for about a year. And I'm not going to dive into that story, but I did. And I learned the hard way. And this was when I was in my early 20s. I learned the hard way because I bought the business. And I'm thinking, it's going to cash flow day month. We're good. And it's like, oh, wait, no, it's not. I'm going to have a payroll. I know. I got to hurry up and upfront capital, and a lot of people don't realize that your first couple months, you need to have, for our car washes, we have 8 to 12 months of reserves, operating reserves and equipment reserves set aside before we even close.
Yeah.
And a lot of people don't think of how much they need in reserves when they first acquire a business. Mm-hmm. Just like you said, when you acquired your first acquisition, it was ups and downs. Mm-hmm. It's not smooth sailing. Mm-hmm. So you need to have those reserves. And I think you're 100% right. That is a huge misconception amongst people who are in the M&A or just buying a business, that you need to have reserves set aside for debt payments, for payroll, for, upfront startup costs in that business, even though you're buying existing.
Yeah. The rule of thumb, I guess this is just for CPA practices, but the rule of thumb is as follows. So if you buy a practice for $1 million, right? It's normally an asset sale. So you're not buying receivables or anything. You're buying the book of business.
Correct.
And it takes you, 2-3 months to start the billings, to get through the cycle, to invoice out and to get payments in. Oh, yeah. So you're probably for, 2-3 months just shelling out money
payroll, marketing, office, rent, all that.
So I figured that out and I worked through that fine. But then it's a cyclical business, right? Because you got 2 tax seasons, essentially. You got your February to April tax season, and then you got your extension season, which we're about to go in now. Let's say September, October. And obviously, as those seasons are high revenue seasons, but the in-between seasons are low revenue, right? So you need cash flow or liquidity to take you through that. So not only do you need, let's just say 10% of the purchase price to cover you for the receivables at the beginning, you need probably another 10% for working capital. And that's a big mistake that I have made, unfortunately, and I won't make it again. That's right. That is a big mistake.
You're not a fool. A fool makes the same mistake twice. Sorry. That's my favorite saying, but no, you're 100% right. And people don't realize that getting in to any type of business or any type of, even if you're buying real estate, anything you're doing, people don't realize that upfront capital, and it goes quick. It goes very deep.
Nothing's coming in and it's going out.
Yeah, and then you said that gut in your stomach, and you're like, oh, this is coming out, and then there's nothing coming in, and you're like, is this gonna last? Oh my gosh! But long term it will. Hopefully, depending on what type of business and things you buy. But 100%, I know that feeling. It is not fun. But to help limit you.
And the thing is, the banks or the lenders never tell you that.
Oh, they don't care.
They don't care. They just want to get you in the business.
Correct. And depending on what business, most of the time, 99%, you're signing recourse. Yeah. So if things go wrong, if you're taking debt,
you want an SBA, you're doing personal.
Oh, you're recourse on that. And if you guys don't know what recourse is, you're basically signing everything you own, even if it's real estate, you name it, you're putting it all up for liability. So the worst case scenario is you're going to have to file bankruptcy if you're not going to make arrangements if the business fails to pay the bank back because they want their money back. So that's the biggest thing is the banks don't say that. They'll look at your personal finances and hope that you'll put money in and be able to cover it, but they don't tell you, hey, make sure you have 20% set aside here because you're going to need it. It's up to you and the experience.
And let me change the topic just a little bit, but it's related. Okay, so I have a lot of new clients coming to me, which are actually guys, there's some girls, our age kind of thing. Good. They've heard about or they're involved in the SMB movement, right? So for folks who are listening, and this was kind of new to me as well, it took me a while to understand the trend. Yeah. But there's this whole demographic of baby boomers who've built their businesses, cash flow, nice businesses. They're looking for succession plans. They're retiring. Some are dying. COVID was actually very tough on the CPA profession for some reason or another. Really? A lot of elderly CPAs passed away. Wow. COVID. I don't know why.
It opens up opportunity because everyone has to
this. Exactly. So you've got the, folks our age or younger who really have liquidity, but they're maybe retirement savings or something like that. But they want to get out of the 9-to-5. They want to be entrepreneurial. They want to buy a cash flowing business, right? Yeah. So you've got the natural seller and you've got more or less the natural buyer. And we advise a lot of natural buyers in our CPA practice how to do the financing. There's ways to do financing through your 401k where you don't get the early withdrawal penalty, but there's ways and means of doing that. There's the SBA 7A, which I think is a wonderful program, which really can elevate people,
Most definitely. And they just, the SBA 7A, they just increased it to what, 7 million? Because
I did that?
I believe, yeah, it was
5.
It was 5. They just recently in the past couple months increased it to 7.
Interesting.
Because we've looked at one of that for our car washes. We actually looked at one of those options and we're going down that route. And they increased it to 7. And obviously you have to get out of a loan, like that's max for those individuals that don't know. Like you can't use an SBA on 2 different type of properties. Like you're maxed out at that 7 million. Yep. Like you can't have 2 properties at 7 million each. You can have 2 properties at 3.5 million each, but you're maxed out at that 7 that you can borrow from them. But yeah, they just increased it to 7.
Yeah, so there's these financing arrangements.
There's a lot of stuff in the government that comes out every single day we don't even know about.
Yeah. But yeah, so I think this trend is well in motion. This movement of businesses from baby boomers to millennials, and it's definitely keeping us busy.
I always say, and I've been saying this, the best businesses, in my opinion, to buy right now are plumbing, electrical, HVAC, those necessities. Because if you call a plumber, you're going to pay anywhere from $400 to $800 per hour for that plumber. Yeah. I mean, in some cases, they charge more than attorneys, and it's a necessity. If your house is leaking, you got to get it done. If something's going on with your electrical or your HVAC unit, we all know how hot Georgia and the Carolinas get. Yeah. Our wives, our girlfriends' wives, they're going to want AC, and we are too. So I always say, you're getting into a business, look into a, electrical, plumbing, HVAC company, because those are always going to be in a necessity in good times.
I saw a company. So again, just turning the listeners on, you go to X, Twitter, and look up SMB. There's a few good characters out there that you can follow. There's a guy who does strip malls. There's a guy who does gas stations. There was one guy who does roll-ups of landscaping companies, and he's built this huge company, just landscape.
I know a guy, he's rolling up pavement companies, concrete pavements, a tar and also concrete, and he's going to roll them up to about 12 companies and then exit them large to private equity. The biggest thing that private equity loves, and this is why they love the car wash industry, is the reoccurring revenue. So if you have an HVAC company, try to find a way where you can charge or have a opportunity for your customers at $50 a month or $50 a quarter, and you say once a quarter we'll come by and put in new filters in your home. We'll not
a subscription service.
Correct.
Yeah.
If you can find a way to build that subscription service within your customers and that community of them paying you on a monthly basis, that is how you are going to substantially 10x your number, because they know that reoccurring revenue that's coming in. That's why car washes in 2022, car washes were being traded for 20 to 25x multiple
on earnings.
Oh no, yes, huge.
Sure is hot.
Now our competitors are buying for about 9 to 12. We're buying for 6 to 8. So we're able to get our hands on them quicker because we can close quicker. We have I'm not going to give all of our secrets out, but there's a lot of things we can do a lot faster than our competitors. So we're able to get at a smaller multiple because these mom and pops need the money. But yeah, back in 2022, they were trading for 20, 25x. Unbelievable. And the biggest thing is because of reoccurring revenue. You can, for example, we have one site in Cape Coral, Florida. The city just mandated that they are not allowing any new developments of car washes. Well, that's great because we're already in.
Perfect.
And then on top of that, we've looked at other competitors. They're running at anywhere from 3,000 to 6,000 members. Yes, at these sites.
Wow.
And our top package is $50 a month. Yeah. So the reoccurring revenue in the car wash industry is what made the boom. And we have very high profit margin in the car wash sector. But if you can create any type of company and create some sort of reoccurring revenue, that is where you're going to see that huge multiple. I buy my pants, not these shirts, but my pants from BYLT. I'm not sponsored by them, just to let you guys know. But I just noticed that they're now asking for a $5 a month membership.
Right.
And it's like, well, what am I going to get for $5? Am I going to get 10% off or something? I haven't looked into it, but I just started seeing emails, $5 a month member.
Yeah.
So if you could do that at any type of business, your multiples could be a lot.
Yeah. And that was the rationale for doing the CPA business, right? So it's very, very steady revenue. Yeah. The revenues, it can be more subscription based. Most older practices are not. It's a la carte, hourly fee and stuff. But, newer clients, we're putting onto an hourly a monthly retainer fee, if you will. And, for the monthly fee, you get 4 quarters of tax planning, you get your tax return done. If it's a business, you'll get bookkeeping and handed in.
And you can call in with any questions that pop up, email.
So it works. It's attractive for acquirers.
Yeah.
Sometimes you end up doing too much work for too little money. There's that element. And then sometimes if you're doing too much work and you feel like you need a bill over and above just because it was totally out of scope, it can
be a tough
conversation.
Most definitely. I think what you're going to see is private equity companies, very similar to ours, are going to get into the middle market businesses. So, 50 to 100, 150 $1 million businesses in revenue, and they're going to build them up. Just like you said, they're going to acquire multiple, bring them all together under one brand, create a reoccurring revenue model, and then sell it for a huge number. I mean, essentially, that's what we're doing in the car wash space. Every car wash we buy are branded the same, Aquashine Express Car Wash. We all have memberships there. In 7-10 years, we'll sell it off as a huge book.
So as you say that, I wonder something, and I'm in exactly the same boat as you, right? So I'm saying to myself, well, if I can do, 4 or 5 practices and get to a certain level, then maybe I can bring in a PE partner. Maybe even bring in a PE partner now as a financing partner just to scale, and I'll be the operator. But, ultimately, there's PE somewhere in that equation.
Yeah.
And what's got me worried, Chris, is like I'm saying, well, PE, it's almost assumed that PE will be there when we need them, kind of like this trade is going to work that way.
Right.
And is it not the same as saying, is it going to get any better than this, or can it get any better, kind of thing? And so, part of me is saying PE might not be there when you think it's going to be there, right? So,
I think it depends, especially what type of business, obviously what type of revenue and your profit margins. I think that definitely determines.
well, PE will always be there. The question is, are you going to get the bonanza multiple on the X?
Correct. Yeah, that's the biggest thing.
Yeah.
We'll let everyone know. This is all of our investors know. We underwrite to an 8x exit number that we have to hit.
That's pretty modest, right?
Oh yeah, our competition's buying at 10 to 12. So we are being conservative with it, and we lose a lot of deals. I'm not gonna lie. Like, there's a lot of deals, and I'm like, damn, I wish we got that because it looks great. It'd be great for the portfolio. However, numbers are not right.
Let me ask you this. That's an interesting comment, because I have paid up for acquisitions. I don't like paying up. I'm a cheap bastard. Okay, so but I have paid up, and I've noticed you do get what you paid for, right? If you do pay up, you get data systems, procedures, policies, all that kind of stuff. So there is a reward to not paying, bottom dollar.
Yeah. No, and we're not paying bottom dollar. I think the biggest thing is you have to understand the systems when it comes to it. We have a COO that has over 12 years of experience, so he's already built the systems, the processes out with 2 other large private equity companies, top 5 in car wash companies in the United States, private equity backed, and sold it. So we already have the systems and processes. So we are not reinventing the wheel. We're just adding on to it now with new technology and things like that.
Yeah.
I definitely agree with some of our sites in Florida. They are trading at higher EBITDA numbers. And the reason why is because they're producing higher. You have a higher output when it comes to clientele and revenue and more opportunity than you would in the Carolinas, for example. Carolinas, you're going to be maxed out. Some of the sites in the Carolinas, 1.5, 2 million max. Florida, you're looking at 4 to 5 million.
The size of an acquisition.
No, of the revenue.
Yeah. So you're talking about bigger units.
Bigger wash. Yeah, higher revenue. Sale. Yeah, in those Florida sites. So you're going to pay higher ultimately. You're going to pay 7 to 10 million for sites, or 5 to 6 million, whereas in the Carolinas, you're going to pay 2 to 4.
Yeah.
And so it's all coming based off of the revenue.
And how? Now I'm interviewing you.
I know, right?
Finally, we got to take this turn.
You switched it.
No, because I'm going to get free advice wherever I can. How do you deal with the geography, being so all over the place, dispersed? I mean, you're visiting Florida, South Carolina, San Diego. I mean, I assume you have maybe car wash assets on the West Coast.
No. You don't. No. Those taxes and politics can stay out in California. I'm not going to be involved in there. Those trips are for personal relationships with our investors out there and podcasts out there. But to answer your question, we're focused on Carolinas, Georgia, and Florida. So right there on the Southeast.
Smart.
It's growing markets, great taxes, great politics. As you know, everyone's moving to Atlanta, everyone's moving to the Carolinas, everyone's moving to Florida. So that's where we're focused. But I'll let everyone know on this little secret. We use a software called Placer.ai. All your big Starbucks, Jersey Mites, all your big retailers like that, corporate retailers use this software. This software tracks cell phone data. So when you download an app on your phone, it's going to ask you, track me now or track me only when using the app. Well, how many times do you actually close the app out if you have an iPhone? Me, never. My son goes on and is like, Dad, why don't you close your apps? I'm like, sorry, I'm just go. Well, it's tracking your location and your movement. Okay. So what I have found is that when it comes to this, we pull up our competitors and we pull up each site. It also tells us if there's any future permits being pulled in that city for new car washes. And it tells us where our customers live, where they work, where they go after. So it tells me that, Greg, you went from this geographical area, which we believe is going to be your home because your phone has been there overnight for the past 5 months. So we assume that geographical area is where you live. You went from your home to the car wash, to work, to Chick-fil-A, back to home. And so we use all of that data. It's creepy. It's creepy when you get it.
Yeah,
I love it. But we use all of that data to understand where are people moving. Is this a site we want to buy? Because I'm signing personally liable on the debt. So there's a lot of risk here. So we want to make sure all of that.
How many turns of debt do you use?
And how many turns of data?
A debt.
For this first tranche of this fund, we have about 15.1 million of debt.
But I'm saying, so just tell me on a typical deal. Let's say a deal's $1 million
75%
is debt.
Yeah, is debt.
Okay.
Yeah.
Even the stable cash flows that may still.
Yeah, given the stable cash flow in the background of the individual who's signing me and the company, given that background liquidity status of the company, that right there determines it. I mean, I know groups that are only getting 50-60%. There's been a group that offered us 90%. We had a president of a bank where we're actually talking to him on, at the site where I'm going to after this. President of the bank calls us up and says, "Hey, we got some trouble going on with this site. The owner built it. It stopped making payments because he ran into health issues. We want you guys to buy it. We're buying it for 4.25. It appraised for 7.1 and some change." And they said, "Look, you guys know how to operate it. When we see your extensive background, just take it off our hands. You just want to start getting."
Bank doesn't want to operate.
No, they don't want to operate it, right? And they don't want to foreclose on it because it's going to look bad on their books because it's a smaller community bank.
Yeah.
So then that means their individuals who they raise capital from on the debt side are going to question, well, hey, you guys have this foreclosure on your books.
Exactly.
What, let me look into those other deals we invested in. How leveraged are you guys on that deal? So you guys know what you're doing when you're lending our money out.
Yeah.
So they don't want that on their books. So they came to us and said, "Look, buy it." Yes, and we're like, "Yes, we'll buy it." Beautiful deal.
You're called a white knight.
Yeah, you got to be able to see that opportunity and take action on it. That's a big thing. So I love that. So beautiful firm. You guys are growing. Is the main ultimate goal is to start compounding other CPA companies and then selling that to private equity.
That is the main goal.
I love that.
Provided I have the perseverance to stick with it. It's tough. I do find it hard. I find it emotionally very tough.
Most definitely.
I can get through it, I believe, because I've done it for a while now. So that's the goal. And the goal is to do the roll up. But, the client base that you're getting, it needs additional services. They need wealth management.
They want an all in one stop shop. That's what they want. If they have to use you for taxes and use someone else for planning, and they don't want that. They just want to come to you and say, "Greg, I want taxes, I want planning, I want you to teach me how to limit my W-2 tax liability, just to do it all."
Yeah, I see that, and so we'll slowly try and expand the business into those areas. We have already. I think you were aware with the renewable energy space. I'll just throw that up if you want to talk about it. But
let's talk about it. Okay.
Yeah. So we've been very involved in renewable energy projects for clients. Yeah. Because of the Inflation Reduction Act, there is just phenomenal tax benefits to investing in. Let's just call it in this instance, it will be a solar project. So you have a church that wants to put solar panels on the roof. They maybe don't have the money to put it on. They know that if an investor will put it on, they'll get a 30% income tax credit. So that's a dollar for dollar tax credit against your liability. So you'll get that. And then there are ways to become an active investor in the space. There are various qualifications that one needs to go through, and we help our clients/investors go through it, which means that depreciation opens up as a deduction, and bonus depreciation, which was a huge Inflation Reduction Act. So it's a good benefit right now. I don't know how long it's going to last.
Take advantage of it.
But we have, in fact, when I was working with you and building my advisory business, I had another client who was a solar installation client, and quite a big one.
Yeah.
I was the acting CFO. And so it was a simple call because I know them, I know their systems, I trust them, projects are sound. So it was a simple call saying, "I got these clients, they need help. You've got these projects, let's talk."
No, definitely. And going that solar route, and I definitely want to chat with you off topic of that, because we've actually been approached for our Florida assets because they're flat roofs on top to add solar to it.
Okay.
The bank actually who's lending us the debt said they would do 100% financing on solar for us, which I know that's big in that space. But I definitely want to chat with you a little bit about that after this. When it comes to offsetting your W-2 income, that's a great way to offset it, is going that investment in the solar route.
Correct. There are limits to being able to offset W-2. I should be able to quote the exact dollar, but I think you can offset up to maybe $250,000 or $300,000 nice in W-2 income. So you can't get rid of your tax liability at all, but there's very little that can offset W-2 income unless you have an active business, for example.
Yeah.
And the problem with a lot of people or a lot of investors is, they're so busy in their own lives, they don't have time to be a real estate professional and get 700 hours per year to qualify as an active individual. So it's tough. There's a few hurdles to get through to make these things work.
And Uncle Sam's not going to make it easy. Uncle Sam's going to make you go through those hurdles so you can actually earn those tax benefits, or it's not going to hand them out.
Well, I don't know. There's certain elements of the government which confuse me because they certainly don't talk to each other, right? Yeah. But my understanding is that the president, through Congress, legislates through the House, and they say, we want the world to go towards renewable energy, and we'll promote it as such to give people these credits to do it. And then the IRS comes from, after a few years later, and they say, well, this technically wasn't part of the rules and you can't qualify for this.
Yeah, I've thought about that with our car wash sites, especially in Florida, and also here in Georgia. We have flat roofs on it. It would be perfect for solar. And then that gives us the ability to also possibly offer, those investors some tax benefits for their W-2.
Yeah.
By adding solar on top.
Yeah. Not that there's a lot of provisos and, there are dots and crosses, I'm sure. Yeah. Specifically, you want to do, each investor should do their own PPA, power purchase agreement. So it's a bit difficult to have 5 investors club money together to go into a solar deal and all benefit from the income tax credits and get the active designation. So it's not so clear. Talk to your CPA.
Yeah.
he can help you.
I may give you a call on that one. I didn't know.
So we can check.
Yeah, I don't know how familiar he is. I know he's big in real estate. He understands that very high level. But when it comes to solar, I'm sure he knows.
It's a different industry.
Yeah. I'll definitely chat with you on that. Yeah. How's marketing been for you?
Well, I got this guy in Charlotte. He keeps sending me all these clients. It's been wonderful.
Does that mean?
No, it's been strong. Been very strong. Good. Very strong. But to the point where we were kind of on the off, trying to deal with it all. It's a high value pro.
Yeah, no, it's a good problem.
So you have a banking relationship that just comes in on each deal?
Yes, we have underwriters. We have pretty deep banking relationships. Climate Pharmacy, M&T Bank. M&T wants our business, so they're flying us up to watch the Baltimore game, and I'm like, look, if you said Formula One, I'd put my ears around my Baltimore. All right, we're with them. Climate First. We have some very deep banking relationships there. So some of these deals we're getting 75-80% leverage. When our COO has been in the space over 12 years, is it's unheard of. Normally people are getting 50-60% leverage, but it's the relationships that we have. But you have large players in space. You have KKR that just came in, Quick Quack. You have some very large players. We have 2 hedge funds that invested with us here. Yeah, and then we have 2 independent RIAs. They brought their clients to us. We're not paying them a fee or anything. That'd be illegal. But they went out to their clients and sent them our information, and one brought about 1.2 million, came back and had they came in big check sizes too, not small. And the 4 came in at 200. The other one, some came in at one came in at 300. Yeah, so they came in with big check sizes.
Individuals,
yeah, and they just sent it out to their people. Everyone said yes. They did a full background check on me. All that went well, and then they signed docs. When we created a whole different type of system for them because we wanted to run through their company, so they look good too.
They didn't find that murder felony in your background.
No, I hid that one.
You managed to get the
yeah.
I'd like to know how you did.
I spent some time, real hard time, finally got that one off.
Real hard time.
Yeah, I think I gave them a wrong social to get past that one. Let's leave off on the W-2 and then solar and how that can impact, the amount you can take that, what you have to do to qualify for that, and then we'll wrap it up after that. Good?
Yeah, perfect.
So we were discussing on, how solar is a very unique way that can actually help offset some of your W-2 taxes. Talk a little more about that.
So to offset W-2 income, which is active employment income, you need other active income. So you need to be designated an active investor or an active business participant in solar. And the way you do that is you form your own single member LLC, and that's technically your solar business. You have to fulfill 100 hours a year, and if you marry filing jointly, you can do 50, your wife can do 50. So it's not much.
Yeah.
And what do you have to do? You have to show that you're furthering your solar business.
Education, your knowledge.
So that can be due diligence on deals, that can be traveling to conferences, that can we actually
full PowerPoint.
yeah, the group that we work with just facilitates education through me. So I'm drip feeding our clients on that to get them to that designation.
Love that.
That then opens up the active category. You're now running an active solar business. The other very important part in solar, there's not a subscription document. It's called a PPA, Power Purchase Agreement, because you're creating power and someone's purchasing it from you. The PPA should be just one person, one single member LLC per PPA. Okay. And that's just part of the rules as far as the 100-hour rules, the active designation, all of that kind of fits together. And that's the way that works. So once you've got this active designation, you can now take bonus depreciation. So because of the Inflation Reduction Act, and last year it accelerated. Yeah. So last year in 23, there was 80% bonus of depreciation. Now it's 60.
Actually, we get
hopefully
I know they passed it. They did not pass it. They failed it. It passed the what? Senate failed the House, or maybe vice versa.
Did it? I thought it passed.
It passed one, but it failed.
Renewing bonus depreciation.
Yeah, it failed the other one. Yeah, they didn't pass it fully because I think don't hold me to it. I think it was what, Senate, House, and then signing for President signs. I think it goes in that order. So it passed one. The other one did not pass, unfortunately. Yeah.
So then you get the benefit of the depreciation. You get the investment tax credit. So loose back of the envelope numbers. If you put 100,000 into a solar deal, you can expect to reduce your tax from maybe 65,000. That's great in the first year. And then you do get tail benefits from depreciation.
Yeah.
So it's really good. You do have to make an investment. So you have to put cash in to get the benefits. But, if you put 100,000 in and you get 65,000 off your tax liability, your risk capital is essentially 35,000 in the deal.
Correct.
That does pay, once it's up and running, you started to collect from this church the utility bill, which is roughly 7% of the 100,000. So you're getting a yield. So it's a really good investment, but of course it's only works and is very sweet because of the income tax credit.
Most definitely. Yeah. Greg, wealth of knowledge. I love what you're doing with the CPA business, your whole history coming over from South Africa. I want to appreciate your time and thank you for joining us on the podcast, and excited to have you here in the near future after we hear a successful sale of private equity down the road.
Thank you, Chris. It's always wonderful chatting to you, and you're also full of knowledge. Thank you. I just love watching you go from strength to strength, man. You're my hero.
I appreciate that. Thanks so much, Greg.
You're welcome. Thank you.
Thank you for tuning in to the Chris Silberman Show. We hope you enjoyed today's episode and gained valuable insight to help you along your journey. Don't forget to subscribe and leave us a review on your favorite podcast platform. If you have any questions or topics that you would like to cover, feel free to reach out directly to me. Shoot me a message on Instagram at Chris_Salerno_. Until next time, keep pushing forward and stay inspired.